Welcome back to the ICT or Smart Money Concepts beginner course. Today we are covering market structure shifts versus liquidity sweeps. Now, this is probably one of the most overlooked and misunderstood concepts to date that I see. So if you are having trouble building daily bias or really getting on the right side of order flow, this video is absolutely going to help you catch those bigger risk to reward trades and ultimately get on the right side of order flow in the earliest possible scenario. So without further ado, let's get right into it. So in order to understand the difference between a market structure shift or break in structure and a liquidity sweep, we actually have to understand a third concept, which is going to be displacement. Now, this is one of the few ICT concepts that doesn't have a clear definition, so I'm going to give you my rendition of displacement and how I actually internalize and analyze this concept so you can understand how I read the charts a little bit better. So to me, displacement is a momentous or aggressive move in one direction that is going to have large, full-bodied candles. So if you take a look at these black candles here, you can see there are big bodies on these candles, and they are large and they're moving with aggression and momentum. Same can be said for these green candles here. Whereas if we take a look at these green candles here, this is going to be relatively small bodies in comparison. There's not a lot of momentum or aggression behind these candles, and they have large wicks instead of large bodies. This is not considered displacement, and this is. Generally, we're going to see displacement have multiple candles behind it, and that's pretty much what I like to see because I need to have a fair value gap present. So although you could see one big candle, that is going to be considered displacement, but you're going to have to look for a fair value gap to form, in my opinion. So if we take a look here, we do have a fair value gap in this example from this candle's high to this candle's low. This is a fair value gap. So this is displacement. Same can be said for this move up over here from this candle's low, or this candle's high to this candle's low. You have a fair value gap here showing displacement. So when you get above a swing point, because remember, liquidity is going to be present above and below swing points. Now, if you don't understand liquidity quite yet, I'll link the video in the top right corner here, but I have a video on liquidity. There is specific times that liquidity forms and specific levels that liquidity forms at, and if you don't understand those yet, it's going to be very beneficial to watch that first. But essentially, we know that liquidity rests above and below swing lows. In this example here, you can see we have a swing high here, a swing low here, a swing high here, a swing low here. And if we take a look at this example, as if we're continuing and trending down, we can see we have a failure to displace above this high. This would be considered a liquidity sweep. This is when we can't close above this high. That's the big first step. You want to see price close above this high to tell you that higher prices are inevitable or are likely. In this case here, we fail to close above this high. We do not have displacement, and there is no fair value gap, so we're expecting price to continue lower, ultimately to this low here. Once we get to this swing low here, we break below, we close below this low with big bodied candles and with fair value gaps. This is displacement. This would be considered your break in structure, right? This is a liquidity sweep. This is your break in structure just due to displacement. Once we get to this high here, we can see that we not only come into this fair value gap here, but we also fail to get above this candle's high here. Now, depending on the time frame, and we'll get into this later, this could be considered a liquidity point as well, even though it's not a swing high. But essentially, what you can see here is we end up coming down and we fail to displace below this low. There's no fair value gaps in this leg down. There's no closure below this low, and this ultimately becomes a failure to displace or a liquidity sweep, meaning we can expect price to revisit higher prices, at least to this candle's high and potentially up into this swing high here. As you can see, we end up pushing up higher with displacement, with fair value gaps, and ultimately with some aggression and momentum above this swing high, making this your market structure shift and allowing price to go higher, likely to reach for this swing point and at other swing points up above. So now that this is more clear, let's hop into the charts and take a look at some real-time examples, and then we'll get into how you can actually use this to build a very basic daily bias, because there is liquidity on daily highs and daily lows. So let's get right into that. Okay, so taking a look at this chart here, we can see that we've got this Asian session marked out, as well as this midnight opening price, and I know that doesn't mean a lot to you yet, but we're just going to keep that on our chart because it is nice to know and reference to later. Essentially, what I'm going to do here is I'm going to mark out this high over here, and I'm going to mark out this low right here. Now, why am I marking these levels out? Well, this first white line here is 8:30 open, and this is going to be the news embargo lift for New York session. And then at 9:30 is our New York Stock Exchange open. So this is where we actually start to open up the market for the New York AM session, and this would be considered your pre-market session. Now, what are these highs and what are these lows here? This is going to be your London high and your London low. And if you watched my liquidity video, which I said was probably a good idea before this one, you know that there is liquidity above and below this high and this low here. So we're going to mark these out going into our New York session open. The last thing that I want to point out here is that at 8:30 we do have CPI data released, and we do not trade CPI data. I'm not going to get into why we don't trade that. The short is essentially it's gambling, and you're incredibly likely to lose even if you're on the right side of the market. So we just don't trade news events, specifically large ones like CPI or FOMC. So you're going to see a pretty large candle here at 8:30 when the news embargo lifts. And essentially something's going to happen here that gives us enough information to build a bias and help us get a directional indication for our New York AM session. So this is our 8:30 opening price here. You can see 8:30 opening is marked out here. Once again, that's a key level, but we're not going to get into that yet. We do end up getting above this London high here. And does this look like displacement above this high, or does this look like a failure to displace? Well, to me, it's very clearly a liquidity sweep or a failure to displace. As you can see, we don't close above this high. We fail to close above this swing high here. And then we also displace lower. So now we take a look at this low here, and we can see we have a big bodied candle that closes below this low, showing us displacement. Now, this is enough for me to consider it displacement, even though there's not a fair value gap, just because of the sheer size of the candle. But what we're going to do is we're going to wait for one more candle to close anyways, and this is going to give us our 15-minute fair value gap right here, just for extra confirmation that this is in fact a displacement move lower. Now, we do have lower targets and lower prices for us to reach towards, and essentially what we're going to do is we're going to mark this out as our market structure shift point now, because we have officially shifted structure to the bearish side here, and we know that because we have displaced below this swing low here, this key swing low. So with this displacement below this key swing low and the sweep above this high, we can expect lower prices. And if you're familiar with ICT's 2022 mentorship, you know that we look to take shorts in this fair value gap up here. Now, given the size of this fair value gap, I would be looking at lower time frames to confirm lower time frame entry models within here. But for the sake of this video, you can see we come up into this fair value gap here, up into this order block right here at the top of this fair value gap. And essentially we end up failing to close above any of these highs. We close inside the fair value gap here, which is a bearish sign, right at 9:30. And then we start to head lower here, and we end up getting below this swing low, right? So this is your market structure low right here, and we end up displacing below that low. Yes, there's no fair value gap yet, so we can give it one more candle. But essentially, once again, we have a massive big candle here, a massive big bodied candle. And if you want to get technical, there is actually a fair value gap up here just to ensure that we do have displacement lower. However, I would like to see one in this area around here at some point. So as you can see, we do get this fair value gap to form right here. And my fair value gaps are just going to be these blue lines. So anything within this blue line, the top of the blue line to the bottom of the blue line, is a fair value gap. And once again, we now have to keep an eye in this high way up here. This is our market structure high way up here. And more specifically, since we're now trending lower, on this low here. Now, we do also have key swing points over here, so we have to keep these levels in mind as well. And essentially what we're going to see here is price come up into this fair value gap, fail to close above this fair value gap, actually close below it or right on the bottom of it, and then start to head lower. Sure enough, we get displacement once again through this low. There's no fair value gap, so we can wait once more. But essentially, just like before, this is going to be a very clear indication to me that we are starting to break structure lower, and we are in fact trending lower with this bearish market structure. So once again, we wait for this fair value gap, second form of confirmation here, right? So now we can really tell that we have displacement here. But like I said, we have to keep in mind that we have these key swing lows over here. So if we take a look, I'm going to change this to black here. And you can see that we did actually take out this low and we closed below it. That's a good sign. And once again, with displacement. So we're going to remove that one. What about this low over here? We have not taken this low out, and we have actually made equal lows here now. So what do we expect equal lows to be treated as? We expect it to be treated as liquidity. So price should have a tendency to run through this liquidity and potentially come back up. But the only way that we can confirm that we're going to go back up after sweeping this liquidity as a beginner student is we're going to have to read this displacement and figure out if this is going to be another break in structure lower on a higher time frame. So if we go up to, let's say, a 4 hour, you can see, or let's do maybe not quite a 4 hour, an hourly chart, you can see this is going to be a key swing point here, and it's actually a market structure point as well. But if we go back to the 15-minute time frame, we're going to have to see what this candle does. Now, we don't quite come up into this fair value gap, and we do close below this low. Well, is that displacement? Let's compare this candle versus this candle, or this candle, or this candle. In the current way that the market is moving, we did get a close below this low. Excellent. That's step one. This could be displacement, but we're not seeing any really big bodied candles like we have previously, and we're also not seeing a fair value gap here yet. So what can we continue to do? Still no fair value gap. We do come up into this fair value gap and push lower, but we're also failing to get below this candle's low, and we'll get into that next example. Essentially, we're coming back up here, still failing to displace below this low, right? So we're failing to get below this low with any fair value gap or any momentum and speed. So this could very well be a liquidity sweep, and we could be starting to head higher. So I'm just going to mark this out as our liquidity sweep until we're proven otherwise. But we can expect now for market structure to potentially start to shift bullish. And sure enough, if we play price out here, we can see price runs up towards this key market structure point, giving us a bullish market structure shift and essentially allowing us to go higher. Okay, so now that we've quickly gone over displacement and failure to displace on the 15-minute time frame, let's hop onto the daily and we can get into building daily bias using this very easy concept. Alright, so now that we're here on the daily time frame, I'm going to give you this very basic idea behind building daily bias using a completely mechanical strategy. Now, this is not a daily bias video. For those of you that are in my mentorship, you know that I like to use market maker models, daily time frames, and market profiles, and this is just going to be a very, very basic or crude way of determining where the next day's candle is likely to draw towards and whether that's going to be bullish or bearish. This should give you a quick example or quick idea here. I don't want to keep this video too long, and like I said, this isn't a daily bias video, but essentially this should be a reminder that daily highs and lows, specifically previous day high and low, is going to have liquidity, and price is going to want to run towards liquidity. So essentially what we're doing is we're looking at previous day's highs and previous day's lows. We're going to see, did this candle here close above this high? Yes, it's displacing above that high, so where should price go next? Well, above the next high, and we're going to delete that low. Did price close above this high? If the answer is yes, well, then price should have a tendency to run towards this high. Did price close above that high? If the answer is yes, well, then price should have a tendency to run above this high. Did price close above that? If the answer is yes, price should have a tendency, to run above this high. And as you can see, price should continue to do this pretty well. This was actually an example that I missed here to show you the opposite, so I'll just work backwards here. But essentially above this high, you can see that this candle failed to close above this candle's high. So you would expect this would be considered a liquidity sweep, and you would be expecting price to run to the low. Failure to displace, you're looking at the previous day low. And now, since we closed below this candle's low here, this candle right here, this one has closed below this candle's low. So we would be looking at this candle's low here. And we're not taking into account things like fair value gaps or any other daily bias building tools. We're just thinking about this in terms of displacement and failure to displace. Sure enough, price does end up taking out that low, but as you can see, we failed to displace below that low. So now we are looking for higher prices, which have closed above this high. So now our draw should be higher towards this high here. Inside bar means nothing changes. We didn't displace or fail to displace below or above any levels of liquidity. So we're still bullish biased here. And the next day does that same thing, still bullish bias above this high, and failure to displace. Now you're looking at this low to be the draw instead of the high because we swept liquidity here, right? We did not displace above this high, we swept it and then came back into the range, or we failed to displace. So now you're looking at this low to be your draw. Price does draw towards that low, fails to displace below that low. So now you're looking at this previous day high for the next day to draw towards. and it does do that, but it fails to close above that high. So then you would be looking at this low, because this would be a failure to displace or a liquidity sweep above that high. And this would be your first example of a losing bias day. So you had lots of correct bias or correct draw on liquidities, and now you've had a point where this did not work. And once again, you're not taking into account things like this fair value gap here in this example. There's lots of other things in bias building tools that you can use, but essentially this is just a very crude or basic way to start looking at liquidity. And now you're going to think price is going to draw higher. It does in fact take out that high, fails to displace, so you're looking for lower prices here, and it does not do that. Once again, we came up to the high, so this is another failed example, but we did fail to displace above this high. So once again, you're looking at this low. Let's see what price does. Once again, inside bar, nothing changes, still looking at that low, and we do actually take out this low here. So if I do click on this, you can see we have 144 and 142.50, and this one is the 142.50. So if we ping this here, we can see that this did actually sweep the liquidity. So that was a successful example, and we should be looking for this high to be taken. Inside bar, nothing changes, and there's the high. Now this will continue to work pretty well. I'm not going to keep going because this is not a daily bias video, nor is it going to be very useful for me to continue to say the same things. So if you want to test this on your own, make sure you go ahead and give it a try. It should be pretty useful, and it's a pretty good basic way to understand liquidity, displacement, and failure to displace, as well as giving you a very, very basic daily bias building tool. So I hope you guys did find that insightful. And if you do have any questions, make sure to let me know in the comment section down below, and I will do my best to answer those. And until next time.